Hello friends, welcome back to my channel, Power of Investment. This week, we're diving into a story that's part corporate thriller, part financial whodunit, and entirely captivating. It all centers around one of India's largest and most influential conglomerates, the Adani Group. Now, unless you're really into infrastructure or following the fluctuating prices of edible oils, you might not be familiar with Adani. But this company is a giant in various sectors. Trust me, this story is juicy, filled with elements that could rival any blockbuster movie. It's got it all: allegations of fraud, political intrigue, and enough twists and turns to make your head spin. Imagine a roller coaster ride through the world of high finance. At the heart of this drama is a report by Hindenburg Research, an American investment firm known for its aggressive short-selling tactics and fearless approach. Short selling, for those unfamiliar, is basically betting against a company, hoping its stock price plummets. It's a high-stakes game. It's a risky game, but when it pays off big, sometimes making fortunes overnight. And Hindenburg, well, they've made quite a name for themselves by taking down corporate giants, shaking up the financial world. Their report on Adani sent shockwaves through the Indian stock market, accusing the conglomerate of engaging in a brazen stock manipulation and accounting fraud scheme. The impact was immediate and profound. These are serious allegations, and they've thrown a spotlight on the Adani Group's meteoric rise, its close ties to the Indian government, and the potential risks to India's financial system. The implications are far-reaching. We're going to unpack all of this: the allegations, the players, the potential fallout, and what it means for the future. So buckle up, because things are about to get interesting. This is a story you won't want to miss. Now, let's talk about Hindenburg Research, the firm that started this whole saga. These guys aren't your typical Wall Street suits. They're more like financial detectives, digging through company filings, scouring public records, and interviewing former employees to uncover corporate wrongdoing. They're not afraid to ruffle some feathers, and they've got a track record to prove it. They've gone after everyone from electric truck companies claiming to have revolutionary battery technology that turned out to be a hill, to healthcare companies peddling dubious medical devices. And when they release a report, people pay attention. Their research is thorough, their arguments are compelling, and their conclusions are often damning. Their report on Adani was no different. They laid out a detailed case, complete with financial data, internal documents, and eyewitness accounts, alleging that the Adani Group had been artificially inflating its stock price and hiding billions of dollars in debt. Think of it like this. Imagine a house of cards, meticulously constructed to appear grand and imposing. That's the image Hindenburg paints of Adani. But like any house of cards, even a slight breeze can send the whole thing toppling down. And Hindenburg, they're more than happy to provide that breeze. Now, let's turn our attention to the Adani Group, the target of Hindenburg's scrutiny. This conglomerate, headquartered in India, has tentacles reaching into a dizzying array of sectors: ports, power generation, renewable energy, mining, you name it. They're like the Amazon of infrastructure, only instead of delivering packages, they're building ports and airports. Their rise has been nothing short of meteoric, particularly in recent years. They've secured lucrative government contracts, expanded aggressively into new markets, and seen their stock price soar to dizzying heights. But this rapid ascent has also attracted its fair share of scrutiny. Critics have long questioned the company's debt levels, its complex corporate structure, and its close ties to the Indian government. And this is where Hindenburg's allegations come in. They claim that Adani's success story is built on a foundation of, shall we say, creative accounting and market manipulation. They allege that the Adani Group has been using a complex web of offshore shell companies to inflate its stock price and hide its true financial position. Imagine a magician on stage, making things disappear and reappear with a flick of the wrist. That's kind of what Hindenburg is accusing Adani of doing, only instead of rabbits and top hats, it's billions of dollars and company valuations. SEBI and the shadow of doubt. Now, no good financial scandal is complete without a regulatory body that's either asleep at the wheel or, even more intriguingly, potentially complicit in the wrongdoing. And in the Adani saga, that role is played by SEBI, the Securities and Exchange Board of India, which is the primary regulatory authority overseeing the financial markets in the country. SEBI is supposed to be India's financial watchdog, the protector of investors, the enforcer of fair play in the markets, ensuring transparency and fairness. Think of them as the referees of the stock market, blowing the whistle on any foul play, ensuring that everyone follows the rules. But here's where things get awkward and a bit murky. Hindenburg's report raised concerns about potential conflicts of interest within SEBI, particularly regarding the regulator's chairperson, who is supposed to be impartial. See, it turns out that her family members have alleged ties to the Adani Group, which is at the center of this controversy. And when I say ties, I'm talking financial links that would make even the most seasoned Wall Street insider raise an eyebrow in suspicion. Now, to be fair, there's no concrete evidence that SEBI's chairperson has acted improperly or has been influenced by these connections. But the allegations alone are enough to raise serious questions about the regulator's ability to investigate the Adani Group impartially and without bias. It's like finding out that the referee of a football match is secretly betting on one of the teams, creating a clear conflict of interest. Sure, they might still call the game fairly, but it doesn't exactly inspire confidence, does it? The integrity of the entire system comes into question, leaving investors and the public in doubt. India's financial system, a test of faith. The Adani controversy isn't just a headache for the conglomerate and its investors. It's a seismic event that has sent shockwaves through the entire financial landscape of India. It's also raised broader concerns about India's financial system and its ability to handle such high-stakes allegations. The integrity of the system is now under intense scrutiny. Think of it like a stress test. This situation is pushing the limits of the system, testing its resilience and robustness. If a country's financial system is a car, then a major corporate scandal is like driving that car into a brick wall at 100 miles per hour. The impact is sudden and potentially devastating. And right now, all eyes are on India to see how it holds up. The world is watching, waiting to see if the system can withstand the pressure. The Hindenburg report has shaken investor confidence, not just in Adani, but in the Indian market as a whole. The ripple effects are being felt far and wide. Foreign investors, in particular, are watching closely, wondering if their money is safe in a system where a company can seemingly rise to such heights with, let's say, questionable practices. Their trust is wavering. It's also put a spotlight on the close relationship between business and politics in India. This relationship is now under the microscope. The Adani Group, with its vast wealth and influence, has long been seen as having a cozy relationship with the ruling government. This perception is now being questioned more than ever. This coziness has raised concerns about crony capitalism, where businesses thrive not because of their merit, but because of their connections to those in power. The fairness of the system is at stake. It's like going to a restaurant where the only people getting good service are friends with the owner. The disparity is glaring. Everyone else is left wondering why they even bothered. The sense of injustice is palpable, leaving many disillusioned. The Adani Group. Navigating a sea of troubles. Now, let's circle back to the Adani Group, the eye of this financial storm. The Hindenburg report has hit them like a ton of bricks. Their stock price plummeted, wiping out billions of dollars in market value. They've faced intense scrutiny from regulators, investors, and the media. It's safe to say that they're having a very, very bad time. They've denied all allegations, calling Hindenburg's report a malicious combination of selective misinformation and stale, baseless, and discredited allegations. They've launched a PR blitz, hired top lawyers, and threatened legal action against Hindenburg. They're basically throwing everything they've got at the wall, hoping something sticks. But the damage is done. The allegations have tarnished Adani's reputation, spooked investors, and raised serious questions about the company's future. They're facing investigations, lawsuits, and a whole lot of uncertainty. It's like they're trying to sail a ship through a hurricane and they're running out of options.